Yeah, well, every company should be able to have reward programs, just like there's credit card rewards or there's airline miles. And so for them to come in and try and ban that in the crypto industry is them just trying to block their competition. And I think most members of the Senate are not going to do a big bailout for the banks at the expense of the American consumer. American consumers want to just earn more money on their money. That should be totally allowed. Now, I don't want to completely throw them under the bus. I think that's one. These banks are so big; they have many different teams and people. Some of them, their policy folks are going around lobbying for that, which they shouldn't be doing. But other parts of these banks, we're actually partnered with them, and they've been very innovative. The other parts of the bank are actually leaning into crypto. They understand that this is a technology that's important to update the financial system, and they want to participate in that as well. So we're happy to partner with the banks and power their crypto custody and trading and payments where appropriate. We've done that now with a number of banks like PNC Bank. We partnered with JP Morgan, but their policy folks sometimes are doing a different playbook, and we'd rather that they just operated on a level playing field with every other company. Yeah, well, I've been really pleasantly looking at all these IPOs happening in the crypto space. I mean, we want there to be a robust, thriving crypto industry. And it's true that we went out first. We became the first public company in the space. We're the largest. And I think that we have a good shot at continuing to do that. But we need to have a robust ecosystem of crypto companies. And really every financial service company, whether it's a bank, a payment service provider, a fintech, we want them all to integrate crypto into their products. That's how we're going to get a new, more modern, more fair and efficient financial system all over the world. And so what I try to think about from a Coinbase point of view to make sure that we're continuing to lead is that we're storing more crypto than any other company out there. And customers trust us with their crypto. And when they're storing crypto with us, they're more likely to use our products, whether that's trading or payments or earning, staking rewards on their assets. So as crypto continues to eat the financial system, hopefully we can provide more and more of those products. And ultimately, we want to be a bank replacement for people. We want to be their primary financial account. And we can offer better financial service products across the board, not just on trading, but even things like giving you a credit card that pays 4% rewards in Bitcoin, which we just launched recently.
Would you say that you have an ambition to become a super app and as you just said, replace the legacy banks?
Yes, we do want to become a super app and provide all types of financial services. We want to become people's primary financial account. And I think that crypto has a right to do that. These are just more modern, efficient rails. It makes every payment in the economy fast and cheap. It kind of boggles my mind, like, why are we paying 2 to 3% every time we swipe our credit card, or the merchant is? But whether the merchant pays it or it just means the price is higher when you pay it. And so either way, like, people are paying these fees. It should not cost 2 to 3% every time you swipe your credit card. It's just some bits of data flowing over the internet. It should be free or close to it. And so that's just one example of many things that crypto can do to update the financial system. And we're going to keep pushing on that frontier. We're
looking at Coinbase right now, and it's below its recent all-time high of 124,000 and change. It's at about 100 and, when we can throw it up right now, 15,000. Let me just check so that we're right up there. 115,300. So where do you see it, considering the Federal Reserve cut rates? We don't know if they're in a new rate cutting cycle, but when the Fed cuts rates, how do you expect Bitcoin to behave?
Well, the relationship between interest rates and stocks, it can always be complex. Like, for a long time, people thought these things were positively correlated, and now I think over time people are starting to think of Bitcoin almost like gold or something. It's something people might flee to in times of uncertainty. So it's a hybrid between those two things. But I try not to get too caught up in the short-term trends. What I try to do is look at the long-term trends. And there's a couple of big tailwinds now, which lead me to think that there's a good chance Bitcoin could be at $1 million per coin, by 2030 or so. And that's partly, it's the regulatory clarity that's emerging. I mentioned the Genius Act, and now with market structure legislation, hopefully getting close, that could be a major moment. We also saw the United States of America now has a strategic Bitcoin reserve. So if the United States government is going to begin holding Bitcoin, I think that's going to be a massive driver of demand, and the rest of the G20 countries will probably follow suit. And then the last thing I'd say is that we saw recently the launch of the Bitcoin ETFs by a number of different firms, and Coinbase is actually powering 80% of the custody for those that are out there. But we're seeing a ton of institutional money continue to flow into Bitcoin now that these ETFs are live. So there's a lot of positive tailwinds for Bitcoin. And I think that there's never going to be more than 21 million Bitcoin ever made in the world. and lots of pools of capital still haven't gotten access to it. So that tells me this thing has a long way to run.
Brian, great to talk to you. Thank you very much. We'll watch you forge ahead to become a possible super app, and I'm sure Kevin Durant is very grateful that you unlocked his Bitcoin account, his Coinbase account. I've got one with you, but I remember my password. Good to see you.
Great. Thank you.